In problem 1, we were preparing the revenue account, and we already have completed some schedules related to the revenue account, except for one working note that was regarding unexpired risks that we are yet to do. Besides that, we have already calculated what different amounts will go into the revenue account schedules. Okay, so we had premiums from both direct business and reinsurance ceded. Accordingly, we got the final figure. Same way, certain claims were outstanding beginning and end of the year, and all other expenses related to commission and operating expenses are put. Let's just now transfer all the schedules, or total of the schedules, if I may say, from the respective schedules here to the revenue account. So, first one, premiums earned, that is the net premium after deducting any premium on reinsurance, adding any premium on reinsurance accepted. After doing all those adjustments, the final amount that we have is 540. Okay, then in case of changes in the provision for unexpired risk, we haven't come to that yet. We will do the working note on it. Now, let's see what is provided to us related to the provisions against unexpired risk on 1st of April. So, in the beginning of the year, that is 1st April 2017, there was also there was already a balance of the provisions, right? That means last year some provision was made, and that same was brought down this year, 260, right? All these amounts are in lakhs. Now, in this case, we are going to calculate what is the current year's provision on the unexpired risk. Then we will take that and we will minus it from the opening provision. Okay, and we will get the difference. We will get what is the balance, which is called changes in provision. So we are going to see what change or what difference has taken place from the provision of the last year to the provision of the current year. Alright, and for that we need to prepare a small working note towards the end. We've already done our schedules, and we will also write now a working note in order to calculate it. So, what exactly is this unexpired risk? Like I've said to you before, we have some calculation that we do based on the premiums that have been earned this year. Okay, now we may have earned, for example, in this case, in this problem, the total premium earned is 540 for the current year, right? But despite this, we also make a provision on this premium earned just for those premiums that we have not received as yet. There may be certain premiums that are not yet come back. Like even out of these premiums earned, there may be some outstanding amounts, isn't it? Some amounts that are not received by us. So for that unexpired, or for those premiums which may have not been received, any outstanding amounts of premiums which are there, which clients may not have paid, we are going to prepare a provision. Alright, just it's a provision is like some reduction from your incomes, so that you are trying to make a sort of provision for any losses which you might suffer in the future. Okay, so let's see. For this, we will do a working note. Okay, besides the schedules that we have prepared, let's say working notes, and we have one working note related to unexpired risk. Now we need to calculate two things. First, what is the provision of unexpired risk for the current year? Okay. Second, what is the change? What is the difference between the current year's provision and the previous year's provision? So I subdivide, I say A, provision for unexpired risk at the rate, let's see how much we have to maintain. The problem here says create reserve for unexpired risk at the rate of 50%. Right? So provision for unexpired risk at the rate of 50% on, now we are doing it for this current year. So 31st March 2018. Opening balance is there in the problem of last year's is there. We have to do for this year, 31st March 2018. So unexpired risk provision is always calculated as 50% of premiums earned. The rate of percentage, the rate of the provision is given to us as 50%. Now on what to calculate it? The premiums earned. So of the premiums earned, we are making a 50% provision that some premiums may not come back from the clients. So in our case, our premiums earned are 540, correct? So 50% of the 540 we get 270. Okay, understand that this is in lakhs. Okay, 270 lakhs. So that is our provision for unexpired risk for the current year ending on 31st March 2018. Now, what we really need is changes in provision. Changes in the sense the previous year's balance minus the current year's balance. Okay, so changes in provision for unexpired risk excuse me. So this will first have the opening balance, which is on 1st April 2017. How much was the balance? Given in the problem, provision for unexpired risk of last year is 260, isn't it? Less minus this year's provision, and you will know how much change has taken place, how much of actual provision we have to minus for this year. So 31st March 2018, current year you calculated provision of 270 over here, isn't it? 270 is the current year's. So this gives you a change or a balance of 10. That means this closing balance has increased by 10. Clear? Okay. So this year's provision is, there is a difference between current and previous year's provision, and that is 10 lakhs. So what you need to do here is changes in provision for unexpired risk. Where since we are minusing the provision, put it in the bracket, and this will give you 540 minus 10, which is 530. Clear so far? So we have calculated what is the difference. How much more provision for this year do we need to minus? So that is accordingly 10. Done? So we get the total of all the incomes, that is 530. Income is mainly your premiums, of course, and then you have all the different types of expenses. Let's see, claims incurred. Now let's look down here. Claims incurred, total balance that we have got after adjusting everything is 255. We are just posting now. Then in case of commission paid, again you got a total of 100, post that, and operating expenses you got a total of 150, and total it up. How much do you get? Total expenses now. I'm calculating B, which is all the total expenses, and this is 505. So I've done only the total of this 255, 100 and 150. That gives me 505. Okay, now I want the profit. So I will minus these expenses from the incomes in order to arrive at either the profit or the loss. So 530 minus 505, I get 25. Note that this is 25 lakhs. Okay, all these amounts are in lakhs. So the operating profit that we get from this fire insurance business is 25 lakhs. Now in this problem we have only calculation of revenue, so we stop at this. But in other problems as we advance, we will have also the calculation of the profit and loss account. So this operating profit will further be brought down in your P&L account. Clear? But for now our operating profit is 25.